Thank you for allowing EY for us all to be here and speak about risk and regulation. So for those who don't know me, my name's Laeeq Shabbir. I'm a director in EY, leading the assurance stream on digital assets. And if I'll ask my co-speakers to see if I can move back into the slide just to give that relevant context and just to make it and to build a conversation. So I'm not going to butcher the slides at all, but I'm just going to move slides just a bit back before I present why we're talking about it, if that's also okay by any chance. So if we could just move on to the FCA slides first, just because I love the roadmap that they showcase, and I think it's important for people to understand where we stand at the moment and how this will build forward. And I think just to give that level of context as well, we've also got, we work with investment associations since ages. One of my colleagues is also here, Robin Kennedy, who held the pen on that for far too long, and he invested a lot of time for himself. So we've been in this space for a number of years just to help build that practice for not just from a regulation perspective, but also moving the entire industry forward holistically. The FCA one, please. That you just heard? Yes. Yes, please. Oopsie. So now, why is, from a context perspective, if it moves, yes. So both my co-colleagues spoke about this, and why is this important? Because as you can see, it's been a journey, right? It's not been as easy as, just let's switch the plug and make it work. And currently, where are we now? Because in the sense of appreciating that a lot of regulations have been put out forward for people to comment on, to understand what that means, the impact it's going to have. But then equally, the thing that we have to be mindful of is there are a lot of institutions here and also crypto native firms as well, and you're looking to apply and get registered or regulated so that you can provide a service to customers, right? So it's important to appreciate what needs to happen before you can go through an application process, and what is it that FCA and others may ask in order to make sure that you can provide the right service to customers. So hence why I think this is important to take stock before I start presenting on what that means for yourself and your organization. So again, I'm so sorry at the back. If you could move back to the EY slides, please. Thank you. Right. So it's about starting it right. And why are we saying that we need to start right? So show of hands, again, I'm just being a bit dynamic here. How many here are from financial institutions? Can we just have a show of hands? I can see a lot of hands from there, not on that side, but that's okay as well. But it gets, for me, it's good to understand the audience in that regard, and thank you so much for raising your hands. So why did I ask that question? Now, you would have all seen a risk and control framework or an enterprise risk framework, right? You're a financial institution and you know that, and you have that at the back of your hand already. We also heard from Jamie quite a lot about things which are going to change and things which are not going to change. So when you're applying your application or where you're appreciating a change, what the rule that we often try to say for a financial institution is 20% rule, 60-40% rule, 70-30% rule. 70, 60, or 80% represents your existing risk and control taxonomy. Right, so you've already got that, and that's what we just wanted to call out. So imagine the concept of having governance and oversight. You've all heard of that before. That's nothing new, right? So what we're trying to say here is, yes, understand the governance would apply. Jamie talked about the fact that, we'll have legal representation, an accountable individual. That concept still applies here. But that accountable individual will probably need to understand digital assets, right? So that the individual can provide the right level of governance in the organization. Similarly, we've called out a few things from a holistic point of view, again, very macro point of view to for you all to recognize the fact that, yes, that framework would apply, but a few things will change and tweak according to the way you want to apply for whatever application you want to go through. Similarly, if you want to be working with the likes of an exchange where you want to do buy and sell, you would need to conduct an element of due diligence on them, right? So the concept of due diligence, you're well familiar with, but what will change in conducting the due diligence? Yes, it's the blockchain data that you will have to ingest and therefore appreciate that, is that fine or not? Which comes to the blockchain analytic tools. A bit different in the way you would analyze the data and conduct your due diligence, right? So key message that we're trying to call out here is the fact that please do not consider this to be, oh Lord, this is going to be a massive effort. We would like you to consider that you've already got a very good base and apply that in the case of digital assets very holistically. Make sense? Similarly, blockchain data that you're going to get, or digital assets data that you're going to get from on-chain, making sure that you can retrieve that information, conducting AML or KYC checks. How are you going to do that? I'm sure traditionally firms are already working with a lot of firms in that regard already, but are you going to use another tool that can enable you to conduct that level of checks? For example, working with TRM Labs. I don't think they're here today, but chain analysis or elliptic and so on and so forth. Similarly, you would have heard of smart contracts as well, right? That was being referred in the first session that was conducted. How are you going to make sure that you get yourself comfortable with that smart contract? You're going to use another firm that has the expertise in appreciating that. So the point that we're trying to call out here is you're all familiar with the risk and controls. You understand regulations already to an extent. It's just the incremental effort that needs to be applied. Okay? But then sometimes you also need help in getting an element of assurance. That was exactly the conversation I was having just as we were taking a break. And one of the colleagues was very kind enough and say, how can I get that level of assurance that I can then provide to the financial institution? Right? Because at the end of the day, you build something, but when you're providing that ingestion of data or you're providing that level of service, financial institutions or anyone else could say, you know what, I'm not too sure about this. So I really wanted to demystify the concept of assurance here to help this group understand when we talk about assurance, when we talk about audit, what does that mean? Now before I talk about the slides, and I'm sure everyone's looking at the slides, can I have another show of hands to say, how many people have heard the word smart contract audit? Let's have a show of hands. Lovely. Almost everyone has heard the concept of audit. But let me push that back as a challenge to you, and I'll ask you that question. How many of you have actually seen the report that gets issued in a smart contract audit? Quite a few of you. Not everyone, but a few of you. But when you open up the report, does it actually use the term audit in there? Or does it use something else? When you first open up the paper, and I'll break that down. Fortunately, I don't have an example to show over here, but if I try to break it down, you'll see the report, and nowhere in the report will it say audit. Audit under certain standards. It may say it, but it doesn't necessarily mean it's an audit. At EY, we also do smart contract reviews, but we don't do an audit. And there is a reason for it, because audit has one of the highest level of assurance that you can provide. So I really wanted to break that down because we're working with financial institution. The term comes up very often and say, yes, we've done a smart contract audit. And the simple answer is, it's not an audit. It's a review. So it's a lower level of assurance which is being provided. Okay? I'll give you another example. If someone's doing an audit, basically means rubber stamped, everything's solid, code can't go wrong. Is that right? Codes do go wrong. Smart contracts do get hacked, right? So we have to appreciate and understand the fact that what level of assurance is being provided. So Coming on to this slide over here, the first one is external assurance. External assurance basically means a financial statement audit which is being conducted. So if you go on Companies House, you're going to see, has a BlackRock been audited? You can open up the account, you can see if it's been audited or not. It's going to be on the Companies House, right? That's the first level of assurance, external audit. But just bear in mind, we're in here in UK, we're in Scotland. If you go to a different jurisdictions, it's a bit different over there. So not every country has the same level of that level of standard. Second level of assurance is reasonable assurance under SOC 1, SOC 2. What is that? This is something SOC 2 represents more from a technology perspective. So we were talking about agency. I think at the back we were referring to agents and how can you secure that. That could be the ambit of looking at providing a wrapper of SOC 2 from an IT perspective. Similarly, if you're looking at a fund that basically launches and says, or a custodian that says, you know what, I've got the right level of controls in place, and you can rely on those controls, right? And why would you want that? Because I can't go to every single firm and say, my controls are fine. You create one report that gives that level of assurance to a lot of people, a lot of your users, predominantly institution firms. So you get SOC 1 and SOC 2 or an ISA 3000 report. Next one, regulatory audits. Sebastian referred to a lot of rules coming out. You all may or may not have heard of CAS 16 and CAS 17. One of them is about stablecoin issuance. The other one is about custody. That's the same concept of CAS rules in the traditional sense that has been applied, but now it's changing in itself for digital assets. So again, similar level of reviews will need to be conducted to provide that level of assurance. So the second category is limited assurance. It's basically saying, you know what, I've done something, but nothing's come to my attention that there's a problem. Right? It's a different way of saying things are fine. To saying, you know what, I've looked at things, but nothing's come out as a problem, or I've not really identified anything at the back of certain procedures I perform. So it's the subtlety, and there's a bit of a difference, but again, just trying to really break it down for yourselves. And I think last but not least is just agreeing certain level of procedures. Yes, it's been done, nothing got identified, but that's the least amount of assurance that could be provided to the firms. Now, why did we want to talk about this? And why did we think this was important? Both from risk management perspective, and second is assurance. So there's a lot of change that's happening, and firms are going through applications. So one, we wanted to give you confidence to say, you've got a very good base, start with that, but look to apply or implement or change or tweak. Right? That's important as a message. And the second point that we really wanted to call out was, if you're looking for a service or you're looking for an element of assurance, it can be provided. Right? It just depends on what your need is. Right? And that's important because we're at a stage where we want to build trust in this market. We want to do the right thing. That helps with the FC application as well, but also addresses the confidence issue that we've basically seen with a lot of shareholders as well, right? So again, the key message for our point of view is we want to do the right thing, and we want to help the UK economy grow in that regard. So if it's the case of putting ourselves forward and providing the right level of assurance, we're willing to work with firms. So I think on that note, I'm going to hand it over to you, Maciek. Thank you.